Welcome, everyone. It's Jonathan Weaver. I'm the housing counselor at the Mon Valley Initiative. It's Thursday, September the 21st, 2023, and this is our fourth home buyer club for 2023. So welcome. The idea of the home buyer club really was just to add uh, more information, more knowledge to people that have home ownership as a goal. And I know many of you have been working hard to get there and continue to do that. It's been another interesting year for real estate, and I'm a big believer is we just need to be prepared for that proper house when it comes available to you. So rather than bring in a professional this month, I thought it'd be great to bring in someone who actually just happened to close on her home last week. Stacy's here with us. And everyone's story is a little different. Everyone's looking for something different. And Stacy and I met in the middle of June, I think it was, and she was interested in purchasing the home she rents. So Stacy, welcome.
Thank you.
I thought it'd be great to have firsthand experience from someone who's been through the process recently, maybe can remember some things fresh, and just wanted to get some of your feedback as far as how it went for you through the lending process. So welcome, and anything
Thank
you
you.
want to add to that?
I don't think I really could have done it without you.
Well,
I really don't.
well, that's not the point. The point is that, when you and I met, you were ready to go. Quite honestly,
Right.
your credit was in a good spot. You had some money. So you were prepared. And you bought the home you rented from. So that was a
Yes.
little different maybe than what other people are experiencing.
Right.
So we didn't have to worry about a realtor. We weren't,
Nope.
we didn't have to compete against other buyers. We did, we were concerned how much we were going to get the house for. So, that conversation between you and your landlord, I let you take care of that, and we got it to a place I think that was fair for all.
Yes.
So, so share a little bit. I know that so for anyone out there, Stacy's home is in Westmoreland County.
Yes.
It's a little more rural, and we actually talked about using a USDA loan for you,
Correct.
and that's what you ended up getting. Is that right?
Yes.
Yeah. Okay. The rate I think was pretty good, probably better
Yes.
than neither one of us thought it would be.
Yes.
And it was it 6%? Am I remembering
6.
correctly?
hmm
So,
hmm
in a world right now that we're hearing sevens, Stacy was a little ahead of that to get a little bit better rate. And also on top of that, you were able to take advantage of the first front door program.
Yes.
Okay, and that was matching $5,000 into your deal. So
Correct.
USDA is a great program. It's a low down payment. Closing costs are lower. I think the seller helped contribute with a little bit of your costs, and then we added in there the first front door,
Yes.
6% 30-year loan. So share with everyone, if you don't mind, maybe your overall sense of the mortgage lending process. How did it feel? How do you think it went? Give us some insight on what your feelings were on that.
It was back and forth a lot. It was very chaotic. You'd be upset one day, happy another. It's not something that is an easy process by any means. I said for 2 weeks, I'm buying a house, but I hadn't done anything because I didn't know where to start. I just kept saying, I'm buying a house. It was you that directed me to Somerset Trust, and Trent was wonderful.
Mhm,
And I got mad at him a few times,
mhm,
but he was wonderful. I would definitely recommend the Somerset Trust.
mhm.
The USDA was a little bit hard to work with. Um, they wanted there was paint chips on the second story windows. They wanted all those scraped off. There was paint chips on the porch. They wanted those scraped off. USDA would not approve a loan until that stuff was done.
Yeah.
So it was a very long process, even though really 2 months isn't a really long process.
Right.
But to me, it felt like eternity. Like I felt like I wasn't getting anywhere.
Yeah. Yeah. There's a lot of quicksand in between
Right.
where you start and where you finish. So for anyone out there, it's not just USDA, FHA, VA would want
hmm
paint chips. Pretty common. And if that's the thing that the appraiser picked up is the need to have paint, um, scraped and painted and repainted,
Mhm.
that's expected. So, and that kind of stems back to lead-based paint. And when an appraiser sees that, they get concerned, and the FHA, the VA, the USDA all would require that that be repaired. But in your case, of course, Stacy, was easy because you're there in the home all the time, so
Right.
you were able to take care of that. So where it gets tricky is for someone who's not in the home all the time. How do we get that done? So that takes some good coordination. If you have a realtor, in your case or someone else's case, to coordinate that to see who's going to be responsible for that painting.
Right.
So and if that's what they picked, then I'm okay with that because that's
Mhm.
pretty easy one for someone to take care of. And uh,
Right.
so it's a matter of, does the buyer do it? Does the seller do it? Who's going to be responsible? And then all the complexities that come out with that.
Right. And
You,
we did have issues with that too.
yeah.
The one porch needed repaired.
Mhm.
She lives in Florida, I live in PA.
Yeah.
So she hired a handyman. It wasn't a very good handyman, but she hired one. And we had a lot of difficulties with him. And then he sent her a bill for 3 times the amount that he was charging.
Oh my
Then
gosh.
he was threatening to put a lien on the house,
Oh
a
my
couple
heavens.
days before closing. So there was a lot of things that really is different in my situation.
Hmm. And you could never expect or predict,
No,
prepare for really
no.
doing that. So, yeah, so we talked to Somerset Trust. I met some people from Somerset Trust in the springtime at a home show event in Ross Draver, and I was looking for someone that participated in PHFA. PHFA to everyone out there has that K-FIT program, which helps with closing costs. And they seemed receptive to talking to people. Just so happens that Stacy, if I'm remembering, they're building a new Somerset Trust branch not too far from your place of employment. When I came out to meet you, I noticed that they were breaking ground on a new bank there. So it kind of seemed to all come together. So yeah, so it is chaotic. Uh,
Hmm. Very
it's
much.
a lot of requests for documents and resending and information. And then there's also a lot of not hearing anything. Um,
Right.
I think if I remember, Stacy, there were some periods where your loan officer wasn't in the office; they were gone.
Yes.
So now you have to deal with someone else who maybe isn't as up on your loan application as your original person was. So,
Right.
but you worked through that and
Hmm.
worked through that and we got that handled. They did require that we do some more housing counseling, so that was easy, right? We were able to spend some time talking about the papers you signed at closing and get that to them to get that out of your way. And
Right.
probably the most frustrating part for me, for everyone out there, was that Stacy was messaging me and texting me. She was getting anxious that they told her that she would have an answer on a Friday, and Friday was almost over, and she's like, nobody's called, no, so all she was thinking about is it's not approved. Um, Only to find out it was approved and they hadn't called her, which
Mhm.
I was frustrated with, to leave you hanging all weekend not knowing. I
Right.
thought what was less than desirable. But if those are the biggest challenges that someone faces getting a home, I think we did okay. And
Right.
as time goes on, we'll forget about all of these things and help you.
Hmm.
So, anything about the closing that you went to? Um,
The closing went very smoothly.
Good.
I had Trent from Somerset there, and I
Okay,
had
good.
another lady, Cheryl, that I had dealt with.
Mhm.
No, she told the woman at the closing that she had never seen anyone do such a good job with the closing.
Yeah,
She
good,
explained everything to a T.
good.
She made sure that I understood each page before I signed.
Yep,
So she was wonderful.
good, good.
Kind of trying to rush, but I'm sure she had more to do,
Trying to be
several
efficient. Yeah,
closings after.
being efficient. So
Hmm.
more papers than you expected, or less than you expected.
Um, I think about the same.
Yeah,
I'm sure you've seen my binder. That I did an entire binder. I don't know if you could see it with my background thingy. Probably not. Nah.
no, not coming through.
I did a binder and I did plastic sheets, and every paper I signed, I labeled the page. It's in there alphabetically.
Mm,
Something happens to me, my kids can pick up the house binder and everything is at their fingertips.
it is. Well, good.
So, and it's like a 2.5 inch binder and it's full.
Yeah, and And we talked about the mortgage, we talked about the note and the deed that you were all able to sign. So,
Mhm,
I think it had a great ending as far as I'm.
mhm.
So, so good. So I wanted to have you come on and share some of that to let everyone know that um, it's possible and uh, easier sometimes than what you think. So
Right.
I'm so happy that you were able to come and share that with us today. And we wish you only great things for you and your family and
Thank you.
in your new home. So thank you for coming on today and sharing that with us. So grateful,
Thank you for having me.
grateful for your input. So um, if anyone knows me, fall's my favorite time to think about home ownership. It's not as active. Most people don't go into purchasing homes in the fall. We start to see some slowdown for seasonal slowdown. Um, less listings in the fall, less listings into winter towards the holidays. I know my wife would kill me if we listed our house during the holiday season. So you begin to see a little bit of slowdown of homes that are available. But I think what that prepares us for is a chance to really springboard into that spring market. And there's a few things in the fall that I think about that I think play into potential home buyers benefit, and one is availability of people. Mortgage guys um, slow down. There's less clients to visit. There's less clients to service, so they're more available. So if you have questions specific to a lender, this is such a great time to get in touch with them and get your questions answered. The other thing I think about is it's a perfect time to maybe springboard into a part-time job. I know working a part-time job is hard. Um, Holiday jobs are great because in January you're going to get fired, and that's exactly what we expect. So use that money that you earn here in this holiday season to maybe pay down debt or buffer up some savings or position yourself to be in a better place qualifying wise than maybe you've been up to this point. The second thing that comes along piggyback with that is planning your spending for the holidays. Having some time to put pen to paper on what your plans would be, on a budget, on how much to spend for the holidays. What are you going to do? Can you cut back on gift giving? Can you increase maybe more participatory things rather than spending money things to help position you better for that springtime market? Part of that's buy-in from your family to explain them we're trying to get somewhere else. We're trying to get to a different level, and it's going to take a little bit of change, something different than maybe what we've experienced in the past years. Um, Time to repair. I mean, there's time to repair credit. There's time to improve credit. There's time to let your credit continue to increase over the next 4 or 6 months as we head into the spring market. And lastly, would be to plan that tax refund. Potentially people get tax refunds in the spring. I think that they're becoming smaller and smaller as some of the COVID relief things kick in. But what can you do? How can you leverage or springboard those funds to help you into home ownership in the springtime? So I love fall. I think it's a perfect time for people who want to be home buyers to position themselves for success, to put themselves in a place to make the process easy. Um, Lastly, on my list, I wanted to share a couple of articles that I saw um, that I hope will be of interest. Um, and I'm always trying to read. I'm always trying to uh, find out what's going on, the pulse of the market. Um, and saw these two and thought maybe they'd be um, something we could cover. Uh, give these people. So this one was called Five Things I Wish I Knew Before Buying a House. And I found it, of course, on MSN a couple weeks ago. And one of the first things they talk about is um, they wish they'd known not to buy as much as they qualify for. So I know for many people here, we've looked at income, we've looked at debt, we talked about what's potential. So this person said, that they, wanted to remind people you don't have to buy the top, right? If you're pre-qualified for 120, that you don't have to buy 120. You can buy 80 or 75 or 100, because it's expenses sometimes come up to be more than what you may expect. Second thing on this list was, budget for a wide range of costs. So, we talk about, most homeowners in that first year of homeownership experience some sort of repair that they weren't expecting. So whether that's a water tank or a furnace repair or update. So, but this person is also mentioning things you don't think about: movers and kitchen supplies, light bulbs, paint, those different things that maybe you're not thinking of as you're moving in towards trying to be a homeowner. Uh, Third thing on the list was inspections. So we always talk about home inspections. We always think at Mon Valley Initiative, it's important, imperative to get a home inspection. Part of the sales process is you typically sign a sales agreement, and you have 10 or 15 days in which to um, have your home inspector go in. Usually costs about $500. I love it when you're there so that you can learn from the home inspector as they're walking you through the home. Um, that inspection then leads you with some questions. Do we want this, try to get the seller to fix these? Can we live with these ourselves? Every case is a little bit different. But we still want to have that inspection to make sure that this is a home that you're interested in. And if it's more than what you're prepared to do, or if the seller is not willing to pay for it, then you're able to opt out and not move on to the next step with this property. And that can be sad. You spent $500 for a house you're not going to buy. But I think about you've dodged some expenses maybe that you're not prepared for. So we certainly encourage people to get those home inspections. Anticipate ongoing maintenance costs. So, it's more than the mortgage payment. We got to be prepared for utility bills and upkeep, cleaning gutters, paving, um, grass seed, lawnmowers, all those different things that you're going to experience being a homeowner. Lastly on their list, what they wish they'd thought of was, to ask any questions, all questions, before getting started. So hopefully you have someone that you can bounce those questions off of. I'm more than happy to handle any of those that maybe come up if you're looking for someone to bounce ideas or questions off of. Always willing to see if we can find maybe an answer for you for that. So that was the one article I wanted to cover, and the second one at 15 different points, and I think it talks about the home buying process, 15 steps to buying a home. So, I love when people read these and, you know, keep focused on the goal of being a homeowner. So number one talks about being ready. And sometimes there's being ready financially. There's also being ready emotionally. It's a big commitment to lock yourself into a home for the foreseeable future. So just making sure that you're ready, not only financially but also mentally, career-wise, to make those big commitments. Second thing on the list is get your finances in order. So that in part, that's what we get to do when we meet, is talk about overall, what's the cash flow, what's the credit, where are we savings wise? Let's try to take a look at those things and try to work to get those things in order. So I think, I I want to meet people as early in the process as possible, and I agree that, number two is a good place for us to meet. Um, Make a plan for your down payment. So, um, we often talk about, I think it's about 10% on a FHA type home. You need 10% of the purchase price in order to make this happen. Great news is it doesn't all have to be from you. Some of it come from other sources, sellers, programs like First Front Door, programs like PHFA K-Fit can help contribute to some of that. But we got to know where or have a good idea of where those funds are going to come from. And I remind people, it takes $2,000 just to get this started. Signing a sales agreement, realtor's usually going to want $1,000. Home inspection we mentioned, that's about $500, and the lender is going to want an appraisal, and that's another $500. So we need 2 grand just to kind of try to get this ship out of port and on its way to its journey. So got to have a plan for that down payment. And so whether that's tax refund or working a second job or having dedicated savings that you'd want to use towards that. Number 4 is, a wish list. So what do you want? Where do you want to be? What does a house need to include for you? What are you flexible on? What are you not flexible on? Do you want to be in a tight urban population, or are you looking for something a little more spread out? So everyone wants something different. So I share with people, if you see a house that you like, and if you go to work, go to that house you want to buy in the morning and drive to work from that location to give yourself an idea of what it looks like to commute from that location in the morning time, if that's the normal time that you would be commuting. I know my neighborhood reflects very differently on the weekends than it does through the week. So you want to look at homes different times and maybe do some practice runs to see if it's going to fit your desires or what's on your list. So finding the right mortgage for you is number 5 on this list. So a third of the way through, they're talking about a right mortgage. So maybe that's talking to your lender. Maybe that's kicking around some different programs that might be available to you. If anyone's a veteran, I always anxious to talk to people about VA loans. It is probably one of the best ways I think to get into home ownership is through the VA GI Bill. But to kind of narrow down which one of these programs is going to be best for your home purchase. Get pre-approved. So, pre-approval to me is pretty simple. It's a phone call. You kind of identify the lender you might work with. Doesn't mean you have to work with them. And they're going to get some information on the phone. It's 15 minutes. They're going to pull your credit. They're going to base pretty much everything on what you share with them. So you could do a pre-approval and tell them you make $10,000 a month, and they're going to type in $10,000 a month. So where the rubber meets the road is you got to prove then that you make $10,000 a month. So getting pre-approved, I think, is easy and something that I think is worthwhile. If your income's interesting, if you started a new job recently, maybe you get commission or self-employed, I would encourage you maybe to send some additional documents to the lender so they can get a chance to review that to make sure that what you're calling income and how you see your income is the same as what a mortgage lender would call it. So there's a bunch of different rules that go into what can count, what can't count. And I would want to make sure that that's kind of been vetted before you get into setting up an offer. Finding a real estate agent. This, to me, might even come earlier in the process. I always want people interviewing. We talk about going to open houses to see homes, to practice our open house skills. Part of that is you're going to meet real estate agents. So maybe you already have someone in your family or someone you work with, or you met a realtor that you want to do business with. So interview, I think you're interviewing how they work and whether how they work matches up with how you work, and make sure that it's a good fit. And I think there's checkpoints along the way. If you tell your realtor you want ranch houses only, and they're bringing you 2-story colonials, then maybe you need to have a conversation that you guys aren't talking the same language, and you want to make sure that what you're looking for is being clearly communicated to your real estate agent. Number 8 on their list is go shopping. So that's looking for the home. Scary part, going out, seeing which one you like, and if there's one that you like, talking to your realtor about how to make that offer. And that follows up in step number 9. So as I mentioned, usually when you make that offer, the realtor is going to ask for a check, hand money check, deposit check, good faith money, and you are in a binding contract. You are in a legally binding contract at that point. So cold feet and trying to get out of it might come with other consequences like losing your hand money or legal action, which can actually get, depending on what's happening, it can get as far down as actual legal action. So making an offer, I like people to make an offer based on what they think. Sometimes agents might want to guide you not to lowball or not to ask for some of those things, but you can ask for anything you want. Doesn't mean the seller has to accept it. And every deal is different because you're different and the seller is different and everyone's got different things that they're thinking about. So use your best guidance to make an offer that you feel is going to be fair. Um, if you're asking for seller assist, if you're looking for help on closing costs, you have to realize that maybe you don't get to push down the sales price by 20,000. So there's give and take, and you kind of need to look at each situation independently because every seller is different. If you're buying from an estate, it's very different than if you're buying from a young family trying to move up. So kind of get a sense. And I've always reminded people, try to get a sense of who's in the home, who's selling it. Is it a flip? Is it an estate sale? Is it a family moving up or down? Try to get a sense of what's going on so that you can put together the best deal for you. Once you have a signed sales agreement, then usually we take that to the lender. That's kind of their key that they can start the loan process now that there's an address. And then the lender's going to want to have you document all those things that they show here, W-2s and pay stubs, tax returns in some cases, not in all cases, in some cases, bank statements, Social Security, ID. In the underwriting process, it's done by computer. And the higher your credit score is, the less need there is for some of this documentation. So people that have outstanding credit scores, they may not ask for a pay stub. People that have lower credit scores, they may ask for all this documentation. So having a credit score that's at the upper end or as high as you can possibly get it can help you with documentation that it takes to get into your home. Number 11, they say homeowners insurance. I think that's a little early. I think it's a good time to start talking about homeowners insurance. So knowing who you want to do your business with. Many times that's whoever handles your car insurance is a good time or a good place to start, I think, for most people. So in the same, when you buy a new car, the dealer won't let you drive off the car lot without car insurance. So the same thing with the homeowner's policy. You can't get the keys until you have proof for the lender that you have in homeowners insurance. From time to time, people call me and they've dropped their homeowners insurance, which is a terrible idea. If you have a mortgage outstanding, if you have a home loan outstanding, your servicer can do what's called forced place coverage. They can get a homeowners insurance company to put coverage on it, and they don't shop for price. So, if your lender finds out that you've dropped your insurance policy, they will take exception to that and force place coverage on you. And it's not nearly as affordable as what you can get on your own. So some people say it's cheaper if I drop my homeowner's insurance, but I think that's not a great strategy there. So home inspections. So we talked about home inspections. I think this is probably earlier in the process before maybe you get too serious with the lender. So I'd like you to be there. It's an hour, 2 hours that you're going to be there and learn about what might be deficient in the home. And also I look at home inspections as budgeting tools that, they tell you the roof's in good condition, but it's got 10 years. So that tells you I've got to start saving for the next 10 years to replace the roof. So I like home inspections for a couple of reasons. Number 13 they have here is home appraised. So that comes from the lender. That's not something that you order. That's something that your lender would order. You pay for it, but it's actually the property of the bank or lender, mortgage company. It belongs to them. And based on that is if the lender can lend you the money. And the big thing in my mind is, it needs to meet the sales price or higher. So if you buy $100,000 home, as long as the home appraises for 100,000 or more, usually things are going to be okay. It's when it comes in lower that something needs to change. If the home appraises for 95,000, the bank will not lend you 100,000 for something that's only worth 95,000. So a few things need to be discussed amongst the parties on what's going to happen. So really, there's three strategies. One, you could inject $5,000. You could put $5,000 into it. You could say that the appraiser had a bad day. I know it's worth 100,000. I'm just going to put $5,000 cash into it. So that's solution one. Solution two is maybe that the seller comes down in price, and that's the one I suggest people. It's a good time to be quiet. If you had 5,000, I don't think it's a good time to bring that up, because then they'll lean on your 5,000 before they drop the price of the home. So, but the seller could drop it for 5,000, 95,000, and the deal would continue, and the bank would be happy to lend you the money. I always think, if it appraises for 95,000 for you, it's a good chance it'll appraise for 95,000 for the next person that wants to buy the house. So they might as well sell it to you at this point, rather than to wait and see what the next buyer might come through with on an appraisal. So having the home appraised, and that goes straight back to the lender. And usually you get a call to let you know that it's at value, or if there's any repairs, like Stacy mentioned, peeling and chipping paint, that comes up once in a while. Rugs that aren't tacked down are a safety issue. Electrical, sometimes in wet areas, what we call wet areas, bathrooms, kitchens, laundry rooms that don't have the circuit breakers on it. Usually gets flagged and something that needs to be repaired. And I believe you want that repaired. That's certainly a safety item. Fireproof doors on internal garages. So if you have a garage that is internal, and there's an interior door that leads into some basement area, usually, that is not fire rated, that might be something that you see come up on an appraisal. And again, that's a safety thing. And I think having that upgraded to a fireproof door is great for anyone buying a home. Number 14 goes back to repairs. So that's that negotiation back and forth between you and the seller through the realtors. The realtors are the conduits of that. They're the realtors are the ones that take that information back. So, how to position yourself with your realtor to try to get that seller to take care of it. For many of my clients, I mean, we just don't have deep pockets. We don't have deep enough pockets to make some of those repairs. So we largely rely on the seller to do that. And some things we can do ourselves. Sometimes that painting you can do yourself, but you got to get permission to come out and do that, or make arrangements with the seller to do that in some cases. So getting creative can help. Then last thing is the closing on the loan. So, after you get approval, you get it clear to close. Everything is in order. You get a chance to review the documents 3 days before the closing. You actually get a chance to see them before you sign them. And that was done after 2008. That was done intentionally with the Consumer Finance Protection Agency, for people to have a chance to review that before they got to the closing. So in the old days, you would go to the closing and the papers would be there, and that'd be the first time that you've seen them. And often, or sometimes I should say, not often, but sometimes you were expecting to sign a 6% interest rate. When you got there, the papers were at 6.5%. So that's not what you expected. And it's kind of a strong arm way to get people to sign things they weren't quite expecting. So you're at the closing, you're a first time home buyer. Everyone says that if you don't accept this 6.5, the sales agreement's over. And so people felt that they were forced to accept things that maybe they weren't looking for. So after 2000, part of that is what helped lead to the mortgage crisis we saw in 2008 to some degree. There was a lot of things that made that happen. But so getting the closing disclosures 3 days before is something that I think is done for your protection. And you can't waive that. You can't say, I don't need those 3 days. They have to give you those 3 days so that you have that chance to look at that. And so you have a chance to comb over those documents, make sure that you understand and you can ask questions. And if there's anything that's not accurate, then there's time to repair that before getting to your loan closing. So those were a couple articles that I saw that I thought were timely. You know, certainly having Stacy here to kind of give a different point of view from what we've done historically in the past. Having lenders or real estate agents come on, I think just gives a different flavor for what we're trying to do. So this is to me the best time of the year, and I don't know if anyone has any questions or anything they have in mind as they're thinking about their own situation. The market's definitely still interesting. We are seeing sales prices come down to some degree. We are we're seeing interest rates still staying pretty high. They're still probably the highest they've been in 20 some years. But we are seeing more homes available, less competition when a house comes on the market, which I think has been exactly what they were trying to do when they raised the interest rates to end that frenzy that really knocked a lot of people that I think of off of a chance to be a homeowner. When multiple offers were coming in and sellers weren't assisting people with closing costs, I think that closed the door for a lot of people at that moment. So as sales prices start to come down, maybe sellers become more motivated to assist with closing costs. And I think that's what helps people that I work with and come across maybe to have a chance to get that first step on the ladder, that first rung of the ladder of home ownership. So, we are grateful at Mon Valley that you're all interested in doing better, having homes. We think great communities begin with great homeowners. And if there's no questions, we'll just leave this to the next Homebuyer Club, which I think would be in the springtime as we turn the calendar to 2024. It's kind of strange to say that and get ready for that last minute spring push when we have first front door open again. Continue to see first our K-Fit program and some of the different other programs like Penn Hills Grant. If you're in Penn Hills, there's still some Penn Hills Grant funds. So if there's no questions, then we'll wrap that up, and I appreciate you coming out. And as always, I mean, if you want to contact me, we can update credit reports if you feel that you've made some meaningful change. We can update income and maybe recalculate some cash flow as we're planning for what lies ahead in 2024. So thank you, everyone. I appreciate you coming out tonight and look forward to seeing you in the spring.
Thank you.